Are there property value mistakes that affluent homeowners make that cause them to regret living in a certain neighborhood? Are your neighbors deciding what your property values are rather than yourself? Well, listen very carefully to what I have here. I'm Justin Hitt with Prosperity Homestead. I just finished recording a program K0708A, and it's about increasing property values. And I want to cover some very important points that we had mentioned in the program and kind of get you started on that path of increasing property values despite the economy, despite what your neighbors are doing, despite some of the challenges. Now, the recording I did was specifically on invisible property value improvements, and I'll share a few of those, like, for example, keeping up with deferred maintenance. Today, it's kind of the habit of most people to buy a house, not do any deferred maintenance, then move after a year or two. Well, when you buy that house and you don't do any of the roof repair and the foundation repair and the moisture issues, it actually degrades the property, can cause mold and other issues that a good house inspector will notice and will downgrade your property values. If you've ever gone for a HELOC and they come back with this giant list of things you didn't even know needed to be done. Well, maintaining property values is certainly a huge help in your house. We also have in this report about taking back your community. Unfortunately, many zoning laws, many city councils, many governors have set up strange and unusual rules about how you can use your own property. These actually impact property values more than you might expect. The trend today is to buy a home that is got a little bit of yard so that you can have an organic garden, so that you can have outdoor living spaces, so that you can entertain. And a lot of communities don't allow that. They're forcing multifamily homes into what was traditionally a single family home environment. They're loosening up. This is one thing that impacts my neighborhood. They loosened up the multifamily requirements for a single building. So there's these big 10,000 square foot, 8,000 square foot. The house I live in is 3,200 square feet. There's big houses that are multiple stories. And what is allowed in my neighborhood is to split the house. So I've got a nice upstairs that opens to the front of the house, and I got a nice downstairs that opens to the back of the house. The downstairs I use for my office. The upstairs I use for living space. I could split this house and put one family downstairs and another family upstairs. I've just doubled the occupancy of a home, and that can impact property values. In fact, I could split the home into multiple units, and that also would impact property values. So can your neighborhood be changed from single family homes to duplexes, to triplexes, to quadplexes? That could impact property values. And as an affluent individual, you need to know about this, because suddenly your house can go from worth good six figures to worth much less, because very often renters of these multifamily homes because the zoning will allow you to split it for multifamily and rent it out, but not split it and sell it as like a condo or a townhouse. See, so we got a little problem here. We're almost forced to bring in renters. If you're an affluent homeowner, that could cut off 10% of your equity in your home instantly with no change or modification to your own home. Now, it's a little bit different if there's a lot and they're doing a new construction and they're building quality townhomes, quality condos, quality apartments, but still the challenge can be there. If you want to unlock personal freedoms, that's what a lot of folks are looking for today. Many of these governors who have locked people down in their homes, folks are moving out of those areas, and they're moving into areas where they can have more outdoor living spaces. And if your zoning doesn't allow that, if that's not part of your home, folks are not going to want to buy your home. Now, increasing property values isn't just about the sale of your home. It's actually, and I mentioned it a little bit, it's actually important to increase property values when it comes to the equity in your home. If your home is worth $100,000, for example, and you increase property values so now it's worth $150,000, but your loan is only $90,000, that means you could have almost $60,000 in equity in your property, which could be used for a home equity line of credit. It could be used in a refinance. Right now, mortgage rates are at a lowest 3%. 3% mortgage rates. So if you have a 5% or a 7% mortgage and you refinance your home, you could actually take cash out and use it for major repairs like a roof or updating your appliances or updating your fixed appliances, so larger appliances, or even updating your HVAC or comfort systems in your home. These are all very important things. One factor we talk about in this report, and by the way, this report, I'm flipping through it right now, and it is about 75 pages long. Now, you might be saying, why would I need a report on increasing property values that's 75 pages long? Well, first, understand that this report is about, it's actually got over an hour of audio. This report is about helping affluent homeowners increase their property values. So this isn't for a $50,000 home. This isn't for a $100,000 home. If you've got a $250,000 home and you have the opportunity to add 10% or more in increased property value, if you have the opportunity to transform your neighborhood to have other homes around you increase in property value, which impacts your property values even more, it's kind of an exponential growth. If all the homes around you increase 5%, your home will increase 5%. It's almost a guarantee. If you're a real estate investor, if you're a property investor who buys properties to rent, there's the old adage, buy the worst house in the best neighborhood. Well, how do you take the worst house in the best neighborhood and make it an average home without going broke? That's what we talk about in this program. We talk about cash flow, which is very important. If you're going to replace a roof and the roof is going to cost $5,000, that might not be that big of a deal, but it increases the cost, the holding cost of the home, and is actually, in a financial term, spread out over the time of ownership. So may not cost $5,000, could cost $10,000 or $15,000. There's some great new roofing systems available that would allow you to turn your attic into livable space. A lot of houses around here have a stairwell up to their attic. And if they were able to make that attic space better temperature, they could install a cool roof, for example, which is a raised roof with insulation in it. And it opens up that whole space up there. They could end up drywalling and add extra bedrooms to the home, which would increase the value significantly. One of the challenges that people talk about, and in my neighborhood in particular, we had a lot of barking dog problems. And people just didn't understand how bad a barking dog really is when it comes to home values, when it comes to the sanity of individuals in their homes. And that's something else that we cover in this report. Now, I know I'm teaching you quite a bit in this podcast, and you may want to get more information from this report. So you could simply contact our offices at www.prosperityhomestead.org. And be sure to ask about program K0708A. Let's get into this a little bit more. Are you the type of person who's just going to get stuck in a home where the property values are decreasing, and maybe you can afford another home? Maybe you bought a vacation home somewhere, and you bought the vacation home right now. You're stuck with this other home, and you're trying to figure out whether you should rent it out, or whether you should keep the home, or whether you should sell the home. Well, let me share something with you. If you have deferred maintenance over the life of the home, and you decide to keep it as a rental, and your income is above a certain amount, you won't be able to get a passive tax deduction on the house, but you could improve the house. It would increase the cost basis of the house, meaning if your house was, let's say the original you bought it for $70,000. Okay, you've improved it to $113,000. The cost basis is still $70,000. You add a new roof on it for $8,000. Let's say this cost basis goes up to $78,000. If you sell the house now, you'll actually pay less taxes on it because you had an increased cost. The improvement makes the house more appealing. And then the difference between your cost basis and the sale of the home will be smaller, and therefore you'll have less tax. Now, if you're in a high income, high tax bracket, this is pretty important for you. You can take properties and you can sell them out and use the proceeds from there, because one of the concerns people have is when they increase their property values, they have more equity in the home, and then when they sell the home, they may have more capital gains on that home. Well, you can roll that over into your next property, and then knowing that, for example, knowing that to buy the worst house in the best neighborhood, you might even buy an apartment building, live in it for a little while, fix it up, get it to where it needs to be, get it fully tenant, and then now you've avoided the taxes and you have increased the value of something on a marketplace. Now, I am not a tax advisor. In fact, this report does not go over specific tax advice. It only provides you scenarios where when I was a bird dog or when I was doing property investing, when I was working with like-minded individuals who were hardwired to generate profits from a property, and in many cases, they generated positive net cash flow from a property. I just wrote down their stories and I shared their advice. I shared my own experiences here. Again, you would want to meet with a tax attorney, your CPA, or somebody who can go over some specifics. I'm flipping through this thing. There's a big difference between a home and a house. There's property taxes to be concerned about. A lot of times, if you increase the value of your home too quickly, you could get reassessed for property taxes, especially if your city's really hungry for money. And that could cost you on the cash flow side while you're holding this house. And now you're not gonna have as much margin if you decide to sell it. Now, of course, if it's your forever home and your kids are going to the local school system and you're planning to be there for 16 to 18 years, well, then that's not a big deal. The challenge becomes, though, how much can you put into a house before you can't sell it to make your money back? Now, there's some sunk costs because you're going to need a place to live anyway. So some of your costs are going to come out of your pocket no matter what. But if your increase of property taxes is not fueling quality schools, if your increased property taxes is paying for stupid things the city's doing, you may want to increase your property value slowly over the time of ownership rather than all up front in the ownership. Now, let me share that before we close up on this podcast. Let's say you're going to stay in a house for 5 years and you've kind of got a plan. The kids are going to graduate or you wanted to move to a different climate. You can spread out your major capital repairs one per year until you're ready to sell the home or you're ready for this point of decision. That way, you're kind of stealthily increasing property values. See, the way it works is when you get a home equity line of credit, for example, they come out and appraise your home, and maybe it's done by a local real estate agent, but it could be done by somebody who knows where. When you get your assessments for insurance reasons, or somebody's evaluating a property and its replacement value for insurance reasons, they come out. They don't all necessarily tell the city what's going on. So your house could actually go from $199,000 to $225,000 on paper for the bank, but it doesn't mean the city's going to know that. And see, so there are things that you want to do to increase property values that focus on what the bank's looking for. There's things you want to do to increase property values that increase your comfort and enjoyability in the home. There's things that you do to increase property value that are not even tied to the price of the house, that are tied to your lifestyle, that are tied to your livability. Did you know improving the local country club increases your property values because it attracts a certain type of person who buys the homes around you, and then we have this pooling effect where your home value increases through the benefits of others. Now, I'm okay with being the worst house in the neighborhood. I don't have to have the nicest house. I don't have to have everything perfect. Sometimes the outside of my home looks like a remodel. Now, the reason is because sometimes I really am remodeling. Last week, I think it's 2 weeks ago, we dug up a sewer line and replaced the sewer line. Now, the neighbors are upset. Oh, you're taking up the ground again, and what is this mess you're making? It's no grass in that area. They kind of understand when you explain to them you're replacing the 50-year-old sewer line. But the challenge can be is that because you're spreading out these projects, you do stress the neighbors a little bit. But then again, grass grows in 3 or 4 weeks, and then they forget all about what was happening, and you got a brand new sewer line. There's all kinds of benefits here, but there are also some mistakes. I cover both in this report, and I'm thinking about, because this report is actually heavily redlined and drafted April 11th, 2019. I was actually working with a client, and we went through a lot of these things because this is what we're talking about. Here's a statement right here. Imagine using community organization and development to grow your business like a big name politician grows his career. You don't have to lie, cheat, or steal, and you don't need to be judged by a court of public opinion either. And see, this whole section right here is talking about how you can actually use community development, like developing community gardens, developing a garden club, developing social aspects, supporting your local arts and theater. These types of things build up the interest value of your community. And that's people, giving people something to do. You don't want to move to a community that's boring and doesn't have anything fun to do. Well, this actually is explaining how you can do that and also build your business, because affluent individuals don't just want to be in a home. They want a whole experience. They want to be leading the community. They want to transform the community. They want to have a better lifestyle. They want safety and security. They want to be able to go on vacation without their house being broken into. They want to be able to have the right landscapers out there or staff that come out and do some of the maintenance work so that they don't end up with a full-time job and then another full-time job on top of it just taking care of their home. If you'd like more information about this report, again, I mentioned it's report number K0708A. If you write my offices and ask about that report, I'll share with you the next time we're going to do this. Here's how I flipped the page. Martha Stewart and Home and Garden Magazine can show you how to have a classy home at any income level. Of course, many of my clients are affluent business owners. The key here is that you can have the curb appeal, but there are things that you have to do beyond curb appeal that actually makes your house worth more money. We can go into that and more. I was thinking about doing a 3-day class on this because there's some areas we can really go into depth. You ask your questions, okay? Just ask your questions about increasing home values. Mention the program code K0708A, and then we'll see about getting you this report. In fact, I just did an audio on it. We can at least get you the audio and get you started on increasing property values. The more you can increase your property values, the more you can boost your wealth. The key here is that the majority of Americans, their home is an asset to them when it comes to their net worth. Now, a home's not really an asset, but we can go into that elsewhere. But ultimately, from a balance sheet perspective, the more your home is worth, the better your access, the better your leverage, the better your credit score, and much more. I'm Justin Hitt with Prosperity Homestead, where we help you get the most from your small farm, homestead, or estate. And I've been sharing with you some insights to increase property values and letting you know that I now have available a program on increasing property values called with a reference code K0708A. Write my office with your questions. Thanks for listening.